Hey, good morning, everybody. Welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and I've got a killer episode for you guys. So, I'm sure many of you know we have non farm payroll tomorrow. That's one of the biggest economic events out there for the US. What non farm payrolls is it's a monthly US jobs report released by the Bureau of Labor Statistics. It measures 80% of the workforce, so it does not include farmers, right? Hence, non farm payroll. But it has a big say in what the Fed's next move will be. So we're going to pull up market, we're going to look at the fundamentals, and I'm going to show you guys exactly how to prepare. So get ready because Market in the Morning starts right now. All right, good morning, guys. Good morning, good morning. Welcome, guys. Hit that like and subscribe if you're ready to make some money today. I know I am. So first thing I noticed on market today, and we're going to get into non-farm payroll and prepare for it. Let's actually start there, guys. Let's start with our economic calendar, and we're going to put on medium and high. And just so you guys know, for myself, so I trade ES, NQ, and gold. I like to keep my country filter to just US. So just US, apply, keep it on high and medium. And now today we see we have an assortment of news at 8:30. International trade revenue money, initial jobless claims, productivity preliminary, continuous jobless claims. We've got a lot going on in the job category. And it's funny, a lot of people sort of dismiss this area when it comes to the economics, but the jobs is really what drives our, not government, but the GDP. It drives the growth in the economy. It drives consistency. Guys, if people are losing jobs, it might help inflation because people don't really have that money to spend anymore. But where is it going? If people are losing jobs, do people have to then apply for government aid, whatever the case may be? And that shows weakness. So let's take a quick look at our initial jobless claims. Now, this is a high priority, but it is not as high priority as non-farm payroll. So taking a look, initial jobless claims shapes the Fed's rate cut path. Very important to keep an eye on. We see if it's above, that would be bearish for the USD, bullish for gold. On forecast, it would be about range bound, and below would be very bullish. Something I do want to sort of let you guys know about initial jobless claims is these are not continuous. These are all brand new. These are people that are first initially jobless claiming, right? As funny as that sounds. These are people who are just now claiming they don't have jobs. This is building up. So if we're seeing it's 200,000 month after month after month, that's very worrisome, right? That's building up. That's going to add to the non-farm payroll that we look at every month. What we can also see down here on our historical data chart, guys, is the consistency of our initial jobless claims. And when we say consistency, we really don't see a good trend on this, right? We see some major volatility spikes. I mean, it dropped very low here in December 2025. Now, we do get this every week. So it's going to go up and down. And again, something to consider, if we're getting this every week and it's staying at 200,000 or 150,000, 250,000, that's just adding and adding and adding to that non-farm payroll. So very important. Let's take a look now. Non-farm payrolls tomorrow at 8:30. So guys, if you are in any trades at that point, extremely important to beware and possibly be out of any trades. What's going on, Nicholas? Good morning. What's up, Nick? So guys, non-farm payroll in one day. What's cool, guys, with market is check this out. So initial jobless claims, it's important, it's a high priority, but non-farm payroll is important, a high priority. But check out this in focus tab. This is what market does to sort of give you that tier level of how important that economic event is. So non-farm payrolls is in focus, is tier 1 jobs print before pivotal FOMC. We could take a look at our Fed Watch tool. And what I see for this month, of course, is only an 11% chance of a rate cut. But if we take a look at March, March has now increased, is now at 38%, almost 40% for a Fed rate cut today for a Fed rate cut in March for the US. So extremely important. We want to keep an eye on that. And that can help price in optimism into the market. We saw this past year, towards the end of the year, there was a lot of optimism and pricing in for Fed rate cuts. We got the pricing in before we even got the cuts. So this might be setting up to be a similar reaction. So shapes Fed timing on further rate cuts. Again, this signals strength in the economy, strength for the market. really strength for the rate cuts, right? And that's more strength for the market, less strength for the economy, signaling whether labor market is deteriorating, historical moves USD yields and equities, and key risk downside shock to hiring. So a strong beat over 155,000 likely lifts the USD and front end yields. So if yields are moving higher, equities tend to move lower as markets fade aggressive cut pricing. A big miss of 20K or more boosts cut bets, pressuring USD. So watch the Fed dated, watch the non-farm payroll, extremely important. Yeah, man, trading these events is not easy, but with a tool like market, it sort of gives us that insight. If it comes in higher than expected, we can see if it comes in above, that's going to bring the dollar higher, that's going to bring gold lower, right? Because the gold and dollar have an inverse correlation, I should say. So now that we've sort of went through our non-farm payroll, we're preparing for it. We see what's going to happen and how it's going to come out. So above, between 75 to 155, bullish reaction on the dollar, bearish reaction on gold. Below, bearish reaction on the dollar, bullish reaction on gold. So very important, keep an eye on that. And what's cool too, guys, is when that time comes for that event, what is it? It's 8:26 now. I'll show you guys an example on these, but when it gets close to like 8:29, a countdown shows and it will show you and it will update as soon as the event and the economic data comes out. So you could sort of act on it very quickly if you are looking to trade the news. Another way to keep an eye on the headlines, guys, with market is going to be our news feed. So let's say markets are open, you're looking at your analysis, and something comes in, whether it's non-farm payroll, a certain somebody announces something, that's going to come up in your news feed. Would probably use, what I like to use at least, is the high impact. I'll keep high impact on, and we have a really cool alert system. So you could either do live audio feed gives you alerts every time a new feed comes in, or you could do just high impact. Me personally, that little beep, that's our high impact. That gives me the ability to have market on a separate monitor, not have to be glued on it, but still get the alert and the awareness that market provides. So very great stuff there. We can take a look right now and see if anything of interest is moving markets this morning. U.S. Energy Secretary, U.S. will not allow China to have huge control over Venezuela. So this is pretty big right here. I know there's a lot of tension between U.S. and Venezuela. The U.S. recently kidnapped, is the words they used, Venezuelan president and his wife, looking to possibly take control of the oil. But now here comes China saying, hey, no, we want some of that too. So is that now going to raise, instead of tensions between the U.S. and Venezuela, tensions now between the U.S. and China again? Now, when there's trade tensions, there's worry in the economy or uncertainty. Uncertainty tends to lead to poor market conditions on the ES and NQ, because when there's uncertainty, they're not too sure. Now, when there's, and we have to remember too, when there's uncertainty, that usually pushes safe havens like gold to the upside, because when there's uncertainty, we have to remember these aren't day traders that are uncertain, that aren't too sure if they should go long or short. We're talking about uncertainty in the investor space. That's where the billions of trillions of dollars that's invested into the market is. And as we saw last year, guys, when uncertainty came into the market, I'm going to show you on NASDAQ on the daily time frame. Guys, right over here, this was February, end of February. This is when Trump started to announce all of the new tariffs, right? So this is something new. It brought uncertainty. And how did the market react? We sold off on NASDAQ at least over 25% to the downside from all-time highs. That is beyond a pullback. That's beyond a bear move. That's a correction right there. We have since then made our way all the way back up to not only all-time highs, but to brand new all-time highs. Over 50% return on NASDAQ in just this past year alone since those lows. Extremely important about that. Ideally, what I would like to see myself, if we're talking just the charts and what I want to see seasonality-wise going forward, is I'd like to see markets stay a bit strong, price in some rate cuts, and we really want to see how midterms come. This year is an extremely important year. It's midterms. Can Democrats take control? There's a lot of concern, right? Here comes the uncertainty and concern. Democrats take control. Trump is concerned that he gets impeached. What does impeachment bring? Uncertainty. These are all economic factors that we have to be prepared for. And using a tool like market, once that time comes, things get a little closer. We're getting some results from those midterms. They're going to start to show up on what's supporting the bias, what could change the bias, and of course in the live news tab as well. So again, all of this economic news, it's not technical analysis, guys. Technical analysis does not move markets. Technical analysis is the reactions we see. It's the fundamentals that give the base and the fundamental function of the market. If markets are pricing in Fed rate cuts, that's optimism. We know markets love optimism. Just like they hate uncertainty, they love optimism. So if we can see some optimism, possibly like we mentioned, March is a 40% rate cut chance. If this starts to increase to 50%, 60%, we're most likely going to see some stronger moves to the upside on the NASDAQ and ES, and also most likely gold as well. So what time is it? It is, 31. I'm so sorry. I was yapping. We missed the countdown. But let's take a look at how our initial jobless claims came in. So very small, but lower than expected. 208 compared to the forecast of 210. So ideally, yeah, see, it says lower, but ideally forecast wise, it's pretty within range. So I wouldn't be looking for the initial jobless claims to be giving us that big of an impact today because it's within range. If we had some type of extreme where it was like 230,000, 240,000, then we can look for a bit of extra volatility in the market because investors won't be too sure how that's going to impact non-farm payroll. Because it's pretty within range, that's not giving us too much insight-wise into non-farm payroll tomorrow. So we're just going to be patient and wait for that. Now we can take a look at these other reports as well. Continuous jobless claims. This one is up a little bit, but still within forecast. 1.914. Feeds the Fed labor slack assessment. Signals persistence of unemployment benefit usage. So that's what we mentioned before, the unemployment benefits. If more and more people, initial jobless claims, more people are getting on that unemployment benefits, right? The government has to dish out more money. It's not showing strength in an economy, in my opinion. That's simple. What's cool too, guys, is market has a great economic calendar, and not even just like an economic calendar. This is our economic calendar, but more of an economic chart. And with the economic chart, we're able to see, are there any increases? Are there any decreases? Is there any stability in the market right now? So CPI, that's our core inflation. Core inflation has been continuously moving lower. We were as high as 3.5% last April. Now, the last report in December is telling us we're at 2.7%. So inflation has been cooling this past year. But how real is it? We have to remember too, I don't know if you guys remember, but a few months ago, we had jobs reports. And then a couple weeks after that, what did they do? They changed it. I forget the word they used. They just had it. But they changed it. They said it didn't come out right. We're changing it. We're adjusting it. This is how it really came out. So it's almost like, how realistic is this, right? CPI coming lower. The question becomes, and guys, I want to know, if you're watching this and you're in the US, do you think inflation's been dropping? Have prices been dropping near you in the past year, or have things still been higher? Unemployment rate we see has been on a constant grind. It's at 4.6%. That's last December. That's the highest since COVID, 2021. The end of COVID was when it was finally falling off. 4.6% back in COVID. That's a big red flag right there. Now, unfortunately, this doesn't have too much to do with just the economy itself, but also the fact of AI. AI is making such a huge stance in the economy, in the world, and in every single industry. So it's starting to take tons of jobs away. Unemployment is starting to rise off of that. We haven't yet seen that shift where AI takes jobs, but then also makes jobs, right? There has to be that shift where we say, okay, AI could replace 20 people, but how could that 20 people replaced turn into 4 new positions, 5 new positions? We have to try to replace while we take away too, or else our unemployment rate's going to continue higher. Let's see, what else? I mean, retail sales is also on a bit more of a downtrend. The times we were positive on retail sales, over 50% of it, over 80% of it was from large retail buying, not even the small retail, us regular people. So we want to take everything for account when we're reading markets and when we're looking at the fundamentals. ISM manufacturing, ISM PMI, these have been pretty within range. We saw they were at lows of 47.8. Again, they're at 47.9. Really not going anywhere, not giving us the smoothest of ideas. Sometimes we'll look for manufacturing to increase, especially this past year, because Trump's whole thing with the whole tariff situation is, hey, listen, we're going to add tariffs to all these countries and bring manufacturing back to America. Well, doesn't really look like we're getting that. But who knows? Maybe. We could take a look at the COT report as well, just to get a good glance at that and see where big institutions are positioned. So that's the COT report. This is the Commitment of Traders Positioning Analysis and Insights. Very cool tool, guys. This gives us, like I said, some insight into where institutions are positioned, whether it's commercial or they're looking to hedge. So we can go to our indices, or we can even look at our metals. And see, gold is sitting at an 86% long bullish right now. That is a super strong bullish on our markets right there on our COT report. Now, for net positioning, I personally like to use the line chart. It's a little bit simpler to read. And what we do, guys, is the blue is it large speculators. These guys are trading with the trend. So they want to make money as price moves up, and they want to make money as price moves down. The pink, those are the people that are hedging. So those are people that might have a long-term position on gold, but they want to go short in the short term just to protect themselves, right? I'm sure you guys have heard of hedging before. So ideally, when we're reading a report like this, we want to see these lines go inverse from each other. See the blue one go higher with trend if we're bullish, the pink one go lower with trend if we're bearish. The yellow line is small traders. I would not pay this much attention at all. They're not moving markets. We know that. Open interest also isn't the most relative. It can show a little extra volatility, but that's just how I like to read the COT report. And again, it also gives you an idea of the recent COT reports. Have we been progressively moving higher? Look at this. Since October 28th, comes out every week. We've been moving higher, higher, higher. And every time we pull back, look at the significant difference. Plus 28,000, only minus 2,000. Plus 4, plus 3, only minus 5. Back to plus 12,000. So buyers are showing me a lot more aggressive buying than sellers are when they step in. And that tells me also that when these buyers step in, these guys aren't sellers. They're people taking profits. We got to remember, guys, in markets, people will be taking profits. It does not mean we're selling off. No big high impact news as of recently. Some Israel stuff, some Russian stuff. I know recently, where was it? Let's see. I believe over last night, the U.S. seized a Russian boat of oil. So we'll see. Trump says U.S. oversight on Venezuela could last for years. Yeah, I mean, this could be a huge impact. Talk about a catalyst for a whole nation, right? Venezuela. So let's take a look now, guys, at our backtest fundamentals. This is a fun tool to use on market and really gives you some strong insight because we could see what's moving markets and why. So we saw we had a strong move higher. We hit new all-time highs. I want to see what drove that. And if what's driving that to all-time highs matches what we're seeing today, then I'm going to look for that continuation. I'm going to trade my fundamental analysis along with my technicals and look for that trend continuation. So what do we have today, guys? What happened yesterday? Post-data consolidation around 7,000 after mixed U.S. labor and strong service data. ISM services PMI beat 54.4 versus 52.3. That's a pretty strong beat on services, signaling solid service expansion. JOLTS openings and ADP jobs showed cooling labor demands, tempering Fed hike rate fears. Now, JOLTS openings and ADP jobs showed cooling labor markets. Usually means we're cooling down, it's slowing down. We're already at a very high non-farm payroll. We're already at a very high unemployment. If hiring's slowing down too, I would assume if they're not hiring and people are filing for unemployment, that's going to add more to the unemployment. If people who just file for unemployment can't find jobs because they're not hiring, they're going to stay put. Some technicals. Again, this is very cool. Market breaks everything down for us in this area. After 10 o'clock Eastern ISM beat and soft jolts factory orders, ES held firm as strong service growth offset softer labor and orders. With NFP ahead and price pin near 7,000 magnet, flows were mainly range trading and positioning adjusts, not headline-driven breakout. So this was not a headline-driven breakout, and that's sort of something I want to keep an eye for too. If I see that we're making all-time highs, we're continuing higher, and it's not based off of some type of specific headline-driven breakout, that just shows me we have general strength in the market. We're moving off of just continuous buying, strong buying. That's what I want to see. So now I could come back to our homepage, and I could look on the ES here and see if there's any pullback levels that I could keep an eye on today. So I see we have a pullback level of 6,900 and a price target of 70.20. So ideally, I'd really want to be looking for either the pullback to go along, or because I'm looking to go along, I would want us to hold these higher lows. So if we could start to break higher on ES, I would also look for a long position targeting that 70.20, and we could sort of see what's helping support that bias. So Fed December rate cut underpins 2026 easing expectations, softer jolts, and ADP. Everything we sort of just ran through right now. AI-driven capex and earnings optimism attracts institutional demand. This right here is pretty big. We did not cover this before. It was not in that recent. AI-driven capex and earnings optimism. There's that word that markets love to hear, optimism. Now, because of that, and it's AI-driven, I do want to check out the NASDAQ. The NASDAQ is our tech-heavy index. So when we see strong news on something AI-related, we're going to want to keep an eye on the NQ. Hit our brain icon over here. Market is generating analysis, and it's going to give us a quick brief and a quick rundown of what's impacting NASDAQ, where it's trading at, and what happened overnight. We don't have to go on CNBC and watch for an hour. We don't have to download Bloomberg for $25,000. Just use market, $50. We will be looking to increase price soon, so beware of that. Let's see. There we go. No, we wanted NASDAQ. Perfect. Oh no, NASDAQ's giving me a little bit of issue. Let's check on the ES then. ES looks like it was working. So S&P 500 futures edged lower as hot services data and softer labor signals temper early 2026 rally. So futures are trading slightly softer after Wall Street recently hit intraday records before pulling back. So again, we're at all-time highs. We didn't get the strongest of catalysts this morning news-wise, so I'm not really looking for a full-blown reversal. We should not be looking for a reversal without a catalyst. So on the ES for myself today, we can look for some key levels. We can look for some zones. Ideally, look at this, guys. Remember that pullback level we had on market? 6,900. Let's see, 6,900 right down over here. We could sort of mark it out. Now we do our technicals. We want to make sure our technical analysis lines up with our fundamentals. So I have a support zone near 69.20. That's right below our previous day low. So that might be an area of interest I want to keep an eye on. If we could somehow get towards that 69.20, find some support above 6,900, that pullback area, I might look to target those 7,000s. We were just at 7,000 yesterday. I would like to see that occur again. Now, if we don't get the pullback, like I mentioned before, then guess what? We're probably going to just continue. The whole joke, I like to joke in the market that we're either going up or we're going down. But if we're not going down, right, there's only one direction we can pick. I would really want to see those buyers take control again, right? Create some higher lows. Check it. Higher highs, higher low, higher high. So if we hold this low right here, we created a higher low off of that previous day low from yesterday, we should be able to see some continuation. So we're looking for strength on equities. Our technicals and fundamentals are now both lining up to give us a bullish bias on ES today. But we're staying prepared because we don't control markets. We don't predict markets. We just react to markets. So how can we trade this with a reaction instead of a prediction? Well, if we start to fail and we do break below 69.36, that recent higher low that we have, then we can look for a short position on a short term to target that pullback area. Because we do have to remember too, if some of that data was coming in strong and it's putting a little bit of a pause on possible Fed rate cuts, then guess what? They're pulling the optimism. That might give us a short-term pullback. So really a few things to consider going into markets today. I myself am going to be looking for possible longs until markets are able to prove me otherwise. And what I mean by that is, can we take out some new lows? Can we take out some new highs? Ideally, right now, I'm bullish until we take out lows, right? Because fundamentals are still leaning bullish, technicals are still leaning bullish, but fundamentals are showing me that there is a chance of a pullback, right? A pullback, not a reversal. Institutional investors are maintaining constructive exposure to S&P 500 futures as the market trades. I do actually want to see the COT report on the ES as well. I feel like it's very important. I call it the COT report. I know it's called the COT report. Let's take a look. Indices, S&P mid cap. Look at that, pretty 50-50. Actually took a bit more of a turn to the bearish side on the ES from our recent COT report. That's pretty big, something to be a little aware of. Now, because we're looking at the COT report, we can also take a look at the NASDAQ too. NASDAQ has been remaining more bullish. Take a look at NQ right here, bullish, but look at this, sentiment increasing bearish. So if sentiment's starting to increase bearish, we could take a look at this, guys. COT report, we went over it before. The blue line, the large speculators, those are the ones trading with the trend. They were bullish, 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 but look at this massive curve to the downside since about, what is that, December 16th. They were very bullish, then they dropped off extremely strong. So, and on the other side, the commercial is now trying to buy. So that tells me markets might be seeing a little bit of a pullback. We might be seeing a little bit of even a possible short-term reversal, and that's just basically using the COT report itself. Let's see. Again, we could take a look over here and see how it's been updating the past few weeks. Well, the last time we really added was positive 10,000, and that was November 25th's update. Since then, all of December, it's been a decline, 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 a large decline, and a decline. So again, this sort of gives me a little bit of discomfort on the long side, because now I want to go check NASDAQ and see, since we've been declining, have we been able to make all-time highs? No. The last time we were at all-time highs was late October, even early November. Since then, we have not been able to make all-time highs on the NASDAQ. This is another concern and worry, because now our fundamentals are saying, hey, listen, be a little careful. We're possibly trying to ease off on the rate cuts again with this new data, but it's very 50-50. In my opinion, we're going to get NFP tomorrow. That's going to be a super catalyst. So let's take a look at non-farm payroll on our economic calendar. And don't forget, guys, we do have one more news catalyst today, the wholesales inventory at 10 a.m. Eastern. So that happens in about a little over an hour. Very important that you're not in any trades when this occurs, because a lot of times extra volatility will kick in and give us a little bit of an extra move. And if you're in a position on the S&P or NASDAQ, that little move might stop you out before continuing in your favor. So be a little careful on that. So tomorrow's non-farm payroll, forecast 60K, bank forecast 60K, priors 64, minimum is 19,000, maximum is 155,000. Max would be over double the amount of non-farm payroll. So I do want to keep an eye. We see that also, look at our historical data chart down here, guys, on our NFP. It's been declining great over the past year. However, look at this massive curve up we just had from December. So December, here's our other December report. We get these. This is going to be tough. We got it twice in December because of the government shutdown. So we got it like a little delayed. But if this continues to curve higher and can possibly even take out. So look at this. This actual over here was 119,000. So just like we read any type of chart, right? Whenever we read a technical analysis chart, we look for higher highs and higher lows. Well, when I'm looking for my historical data chart, I also want to see if it's trending in any way, because trends show on any chart you do. It's all about the data behind it, right? And charts just let us visualize it. That's where trading is, guys. So we've been declining, declining, declining. So big move to the upside. Now, something else I'll note is when we have those big moves to the upside, Only once right here did we have a huge drop where it went from actual 254 all the way down to 112. That's a pretty wild drop, and then goes right back up to 227, right? So it's sort of a bit of a red flag in my opinion. So something I'll look for is, hey, can we start to flatten out, or is it going to sink back lower? I also see it right here more recently. September, actual is 22. November, actual 119. Then it claims December is negative 105. But let's be real. Is it really? Probably not. Revised, that's the word I was looking for before earlier, guys. When they revised economic data, that could very well happen again if we're getting reports that might be trying to sway a certain direction. So very important, non-farm payroll is one of the most high priority economic data events out there. Tomorrow, 8:30 a.m. Eastern. Be aware and be there. Let's see, guys. We could take a quick look at gold. We went over the S&P. We went over some NASDAQ. I know a lot of gold traders in here. Guys, comment what you trade and what you're looking to trade today. And what's your favorite part of market? Because I don't know, man. I'd got to say my favorite part's the homepage. It has everything you need right here. Even the news, you could just click it and it'll bring up that news for you. So very cool. I love the day trading bias, the what can be impacting, what's supporting, what could change. Our current market sentiment index. Look at this, guys. Another part of market that is usually one of my favorite parts to check. Gold, yeah, I got you. Absolutely. Equities trade mixed near highs with low spot volatility, but elevated hedging. So be careful. Rotation into value and defensive. So be careful if they're going into value and defense. A lot of times it's leaning a bit more bearish on the overall equities. Fed expectations tempering risk appetite. Again, got to be careful if they lean more hawkish, more dovish. That still has a major pull on the market and the economy. So gold, let's take a look, guys. Let's hit that brain, and in a second, it pulls up the info. Gold futures decline on commodity index rebalancing. Strong dollar despite mid 4400s trading. So gold futures fell on January 8th, trading in mid 4400s as investors braced for futures selling tied to commodity index rebalancing. With a stronger US dollar adding downward pressure, February gold futures declined 0.6%. February gold. Oh, right, because the gold futures contracts, guys. So if you're looking at GC, February gold futures, it doesn't mean, oh, well, gold doesn't expire. It's just the futures contract. So the futures contract's down 0.6%. The decline occurred after gold's powerful start to 2026, with spot prices easing slightly following the week's gains. Technical analysis suggests gold remains at an inflation point as Elliott wave correction completes. So index rebalancing is very important. Add some selling pressure, creating mechanical downward pressure independent of fundamental factors. Guys, look how cool this is. So even if there's a factor that's not tied to the fundamentals, but tied to the commodity itself, market will make sure you know. So creating mechanical downward pressure, that's because of rebalancing. If they have to rebalance, because there's a very large spread going on within the balance sheets. So they have to rebalance, usually requires them to sell to get whatever that is, silver, gold, to a more regulated price so they don't get a margin call. This technical event drove intraday weakness as investors adjusted positions. A stronger US dollar. Something else to mention here with the creating mechanical downward pressure. That's also has a lot to do with what's going on with silver. Silver has been flying extremely strong, and a lot of large banks and institutions are actually very close to margin calls due to how strong silver has been. Future rate cuts obviously have a big impact. Now let's take a look at what's supporting and what's going against. So Fed policy now easing after December rate cut. So easing policy, they're still going to be cutting rates. Fed officials discussing further cuts, policies seen restrictive. Rate cut cycle weighs on dollar over medium term. And what could go against? What could change this bias? So annual commodity index rebalancing. That's what we know is sort of dragging us a little bit lower this morning. Let's take a look at the gold chart. and see where we're at. We know that we rejected yesterday, the 7th, to the downside a bit, but that doesn't mean we're bearish. Guys, looking at this chart, we turn off the drawings, just looking at a plain chart, what are we doing? We're creating a higher high, creating higher lows, higher lows. This is very clearly a bull trend on the daily time frame. We have to remember, though, if we're day traders, the daily time frame is helpful, but we're a bit more interested in what's happening on a bit of a lower scale, a 4-hour, a 1-hour, 30-minute. So daily time frame, I'd still want to be more bullish. We just came off of another all-time high on gold. Due to that rebalancing, due to some of that technical pressure, I don't want to be going against that, though. So keeping an eye on gold. I'll also be keeping an eye on the dollar. And if I'm looking at the dollar here too, guys, what's the dollar been doing since December 24th, right? Christmas Eve. The dollar has been increasing. The dollar's up over 1%. That alone is going to make it difficult for gold. Let's take a look at gold. So here's where, that's funny, man. Look at this. Gold made a new all-time high while the dollar was starting to base out and move higher. So the dollar was started to move higher while gold was still moving higher, signaling a little bit of weakness and a slowdown. Once that dollar finally started to squeeze and get that break up, what happened? Gold gave us that reaction, that strong move lower. So with the strong dollar, with a weak gold, with the rebalancing, I am short-term wise going to be looking for a possible scalp to the downside on gold. And we can use market to, again, get an idea of where those pullback levels and areas are. So we have 43.60. I see that was a bit of a gap during the futures market. 43.60, come to our hourly. Look at that, right over here. That's a great area of support. If we draw a rectangle tool out, there we already had one there. Look, that's pretty funny, guys. I already had one right below that. So that's our pullback zone. That's where I would possibly want to look to target. Now, again, because we're day trading, and this is a pretty far move to the downside, it's 93 points right there. I don't think we're going to get a 93-point move on gold in a single day. Is it possible? Sure. Is it probable? Not likely. We do have to remember, though, if it's a rebalancing situation, a technical situation while we're selling off, and we do start breaking recent lows, institutions, day traders, investors are a lot quicker to sell than they are to buy. So if we can happen to break this 44.10 over here, so check this out. This is our last and our most recent higher low, then we created another higher low off of it. If we can somehow scale down and break that low, then guess what? We're creating lower lows. And guess what? To the upside, we just started creating some lower highs. So our technicals are starting to break lower. Our fundamentals are also trying to line up with a bit of a pullback for today on gold. So things are lining up. We're going to be looking for shorts on gold. ES, we saw we had some strength. We'll possibly be looking for longs. And guys, that's our trade setups for today. Using market, we're able to see exactly what's driving markets, give us some fundamental backgrounds, give us some fundamental information, and have our technicals line up with it, right? Technicals help us for our actual execution. Fundamentals help us know if we're trading on the right side of the market. Guys, that's our episode of Market in the Morning today. I hope you all enjoyed it. Really great setups going forward for this for today. And don't forget, non-farm payroll tomorrow. Make sure you use market to stay ahead of the game. Take care, everybody. Have a great day, and I will see you all later. Peace.